My name is Justice. I'll be moderating today's session. Welcome to the edition of the Market Color, where we step aside the noise we hear every day, and then we look at a structured way and also pay attention to the forces that are shaping the market. This month, we will be looking at geopolitics, we'll be looking at commodities and where that leaves investors here in Ghana and across the region. We have one of our good senior associates on the decks who is going to take us through today's conversation. Today's session will be delivered by Daniel Tete. Daniel Tete, I think, needs very little introduction because he holds a record for the most market color sessions presenter, and it's a record that keeps growing every month. And so I think it's a voice that everybody have heard. What makes Daniel's perspective key is the experience that he has across the firm, where he has worked across asset management, brokerage, and research. So it means that he has a diverse view on the various fields that we are going to look at today. So he's not just looking at it from one seat. He understands how it shows up in our portfolios, how we trade it, and what research is telling us. And so that's going to be a combination of what actually Daniel is going to do today. So without further delay, please join me in welcoming Daniel to take us through this month's market color. Daniel, can you hear me? It's been a while we saw you. Where have you been? Have you been to the Bahamas?
I haven't been to the Bahamas. I've been around, in and around the market. I hope I can be heard. Great. It's always a pleasure to be on a call such as this. I always see it at every single opportunity that I get. And I'm glad that today I can be on this call with my own gas and the family. And for the past 5 years, close to 5 years, we've been running Market Color. And the very little I can say is big appreciation to the team and everybody who has put in work, sweat, resources, management for giving us such a platform, giving the market such a platform to always sit around, have a conversation on some of the things that pertain to our market, how to position our portfolios, and the very needed details that we need to navigate some of the turbulent spaces that we find ourselves and how to generate alpha. Now, over the past close to about 2 decades, there's been continuous conversation around how countries are repositioning themselves. And just to take you a bit backward a bit, for quite a long time, we've been trying as individuals and as countries and as global participants to get the world closely knit together. And we've done that. We've tried globalizing every single aspect of the global economy. Now, in the past decade, what we have seen is a very strong fragmentation of the globe, continents. Even the relations amongst different countries has sort of deteriorated over time. And over the past 2 weeks, what I've been trying to do is trying to simply try and understand how we got here, why we are doing what we are doing to ourselves, and why some specific individuals or certain specific leaders in certain specific countries are trying to take us through this route, what they seek to gain, how that affects the investor, and how that's in the end of it all affects the portfolios. And I've got so much insight in the past few weeks from my hospital bed, and I'd like us to take us through this presentation in a very specific way. Now, in the past 10 years, in the past 20 years, there's been a series of wars, and most of us have cared specifically about certain things that pertain to us. We've been more concentrated on alpha that we can generate, the returns that our funds are producing. And we seem to forget the kind of collateral damage that has been caused by all of these altercations, all of these tensions that have occurred across the world. We've seen US and Iran have series of geopolitical tensions. We've seen fights between Israel and Hamas in Palestine. We've seen the US, the Houthis and Yemen being in a tussle. We've seen Russia and Ukraine. And the level of collateral damage has been really huge. Now, when we look at the statistics, close to about 500,000 people, 500,000 Russians and Ukrainian soldiers have lost their lives in the space of a very short time between 2022 and what we see now. Now, about 16,000 plus civilians have lost their lives, have been murdered in the midst of all of this war. About 44,000 plus have been injured. Now, children have also been caught in the midst of all of this, in quote, madness. And about 796 of them have been murdered and have been killed. Now, you compare all of these numbers to the very gory images that we've seen, even if you look at Ghana, for instance, in the past 2 weeks, the kind of accidents we've seen, the kind of explosions we've seen, especially across the Accra-Kumasi highway, and the kind of conversations that have erupted as a result of that. Now, you just oppose that to very similar gory images that have been seen in the Gulf and in other places across Europe. And we seem to be much more fixated on what we stand to gain than the human life that is attributed to some of these countries and to some of these places that we are seeing all of these tensions being hung over their economy. Now, about 130 educational institutions, when I talk about educational institutions, schools, and universities, etc., where people have sought to seek refuge, have been caught up, have been targeted, and have been destroyed, about 130 plus of them. And even when people seek to find healthcare or to try and get themselves back on their feet, about 36 healthcare facilities have been destroyed in the midst of all of this. Now, you look at the number of people that have been displaced as a result of all of these geopolitical tensions, and about 68 million people have been displaced in their own country with no place to sleep, with little of the basic amenities that are needed for them to survive. And it doesn't look as if this is a thing of the past, because just in June, about 300 plus people have been murdered just between the war between Russia and then Ukraine. Now, you look at all of these numbers, and the very simple thing that I see across all of the geopolitical tensions in all of the regions is the fact that there are a series of two-faced countries. So when I say two-faced countries, there are lots of countries that were backing Ukraine in the war against Russia, but in the same way, they turn around and you have a country in Israel doing a much similar thing, but then you find those very same countries supporting these very same atrocious acts. So I'm not going to try and pick sides in all of this presentation. There's a lot of sentiment around geopolitical tensions. I'll try and stay a bit far away from that. What I'll try and do is to try and give us color on how that affects our economy and how that affects our pockets, and some of the things that we have to look at, even aside the collateral damage that has been inflicted on the global population as a result of some of these tussles and tensions that we have seen. Now, who are the people that have been really in the midst or the main figures in some of these geopolitical tussles that we've seen in the past decade or in the past 5 years even? Trump has been a major part of that. Putin has been a very major part of that. Xi Jinping has been there. Netanyahu has been there. Zelensky has also been a very key figure in all of these disturbances, in all of these killings, in all of these bombings, in all of these injuries that have been inflicted on the global population, the people in the Gulf and people in Ukraine. Now, what is the main aim of these geopolitical tensions? And that's something that we have to look at very critically. Now, the main thing that I've been able to uncover is dominance. Now, most of these countries seek to be at the pinnacle. They want to be the first country that people resort to. They want to be the go-to person when you need financing. They want to be the go-to person when you need protection. They want to be at the very forefront of every single mind when it comes to international relations. Now, the US has been very privileged in a very extraordinary way when it comes to geopolitical tensions. And I feel like that is one of the main reasons why the US acts in the way that it acts. Because every single time there's geopolitical uncertainty, there's flight to safety, and it usually ends in dollar demand. It usually ends in people looking for assets that are much more liquid. It leads to movement into treasuries, and that, in effect, in all of those geopolitical tensions, you see that there's effect, or there's a run through into inflation. You see the Fed hike rates, people tend to flood in to get more treasuries, and that boosts, in essence, the US's financial position, and that has given them a lot of dominance. So that has fed into some of the ways that they have managed all of these tensions that have happened in the past 20 years. It has, by looking and by going through the work as a team, as a research team, what we have uncovered is that the dominance, or the dominant factor, is the fact that all of these guys, in Trump, in Putin, in Netanyahu, in Xi Jinping, all of these people are looking for dominance. And in latter parts of the presentation, I'm going to go into how we can also look at all of these things in a very strategic form as well, to also put our economy in a very good position. Now, dominance is not the only thing that they look out for. I've spoken about the fact that all of these geopolitical tensions always tend to play into the hands of these G7 economies, all of these powerhouses on the globe, on the global space. Now, most of them have gone into some of these geopolitical tussles because they want to strengthen their alliance. They want to be protected. They want to have a coalition. They want to have a group of countries that they can fall onto. Most of them just go into these geopolitical tensions because they want to have a global appeal. Just to say that when DR Congo was in distress, we were there to help them. When Ukraine was in distress, we went to help them. When XYZ country was in distress, we went to help them. So it gives them that internationally accepted global brand or global appeal as that country or that nation that always shows up, or that always shows up to put up or put out the flames in every single part of the world, and doesn't just stay in their shell, but has a global sort of a global appeal or a global need to make sure that every single thing is in line and the global economy heads towards where it is supposed to head towards. Now, the other very key thing that we have uncovered in all of this research is the fact that there's a keen interest to secure critical mineral resources. And in the next part of the presentation, I'll go into what informed this analogy and what we have seen. The US, for instance, has gone into several wars in the past 10, 20 years because they needed something. And it's like your enemy, the enemy of your enemy is your friend. But then again, I'm helping you not because I just want to help you, but I'm helping you because I know that there is something that I can gain from you. And even if you take away international relations and you look at even interpersonal relations, a person that always helps you just because they need something from you is something you term as not so much of a good friend. Sometimes they need leverage. And it's one of the reasons why you've seen a lot of the killings. You've seen people block out a whole street that's supposed to transport vessels that are carrying crude that propels global growth. And a reporter puts it very much clearly. The reporter says that the world's superpowers are scrambling for an edge. Every single one of them, Trump, Putin, Xi Jinping, Netanyahu, Zelensky, all of these people are scrambling for a global edge, or are scrambling for an edge over one another. And what this does is that it makes all of us less safe. Less safe, as you have seen in the previous slides, people dying, people losing jobs, people losing investments, infrastructure being destroyed, children losing their lives. Now, what have these guys, or what have these main characters gained out of the very wars that have been fought in the past 5 years even? Now, you look at Russia, US, China, and in Russia themselves, what Russia has shown in the past 5 years is that they are a superpower. And you only get that status when you have gone to war against effectively the whole of the world. When Russia invaded Ukraine, everybody was much clear on what their position was, on why it was wrong. They went through all of the global sanctions, every single global sanction that was meted against them. Russia has been able to scale it. Every single military force, every single military intervention by the US, by NATO, etc., they've been able to surmount all of them. Even when they were taken out of the global SWIFT system, they've been able to survive. Even when they were sanctioned with regards to oil importations from their country into other countries, Russia has been able to survive. So just like dominance, Russia has been able to show clearly that they are a superpower. And despite the whole of the world, or a major fraction of the world, being on the other side of Ukraine, they have been able to survive. And that has, through this war, given them that legitimate crown that they are a superpower, and at any point in time, they can challenge the US and every single other country that tries to take a step against them. Now, the US, on the other side, between 2022 and 2024, has benefited so much from all of this turbulence and all of these tensions. Now, the US dollar has strengthened about 13% between 2022 and 2024. It went all the way to around 19%. It peaked there. And that tells you, like I said in the previous slides, whenever there's geopolitical tensions, these guys know that whenever they flip the world over, whenever they decide to bomb a specific country, whenever they decide to do a specific thing that doesn't so much align with international law, or that so much aligns to how things should be done at the international stage, they tend to benefit because the whole of the world flocks to the dollar. A lot of them flock to have safety there. And that it's something that they continue to benefit from. Now, you cannot only credit all of this strength of the dollar to just geopolitical tensions. I mean, the Fed has played a very key role in all of this, in the strengthening of the dollar, because within that period of time, there's been a series of rate hikes, which has given people an incentive to flock to the dollar. So you can't really pinpoint every single thing on geopolitical tensions, and that's just a caveat. Now, out of the war that has been fought, or that was fought between Russia and Ukraine, the US has benefited. They have secured critical minerals just because they assisted Ukraine in that war. And it is the very similar thing that Russia was trying to do by expanding its territory and taking over, or expanding its borders into the borders of Ukraine. It was all because of critical minerals. And the US goes into this war as a friend, as an ally, as a NATO member, to try and shield Ukraine from Russia. And what it comes out of that war with is the fact that it has secured critical mineral agreements with Ukraine. Now, Ukraine, if you look at it in perspective, Ukraine has about 22 out of the 34 minerals that the EU classifies as very critical. So out of the 34 minerals that the United Union classifies as critical, Ukraine has about 22 of them. And those critical minerals include lithium, graphite, titanium, yttrium, iridium, etc. All of these resources are going to be very key in the next phase of things that we are going to see on the global stage, in mobility, in semiconductors, and in every other space. Now, the US didn't only secure that critical mineral agreement with Ukraine on the side. What it also did is that it negotiated further that in the future, the US should have preference. The US should be the first person that you look out for whenever there's an extraction project that is going to happen in your country. Now, this is the aftermath of the agreement that has been signed. You should have seen the agreement that the US looked to push down the throat of Ukraine when all of this started. And it's very sad because you look at Ukraine, and just another thing that just pops up in my mind is Ukraine is reportedly one of the largest lithium deposits in Ukraine. So on the surface of it, what we see on the background is the fact that, hey, the US is trying to help Ukraine against Russia, but underneath all of that is a ploy and a strategy and a chess game to become a dominant force, and then also to secure critical mineral rights, or to secure critical minerals that will be very essential for the US in its fight against China, or in its race against China in the spaces of mobility, etc. Now, in the midst of all of this, how has Russia benefited? How has China benefited? Now, there's a coalition, which most of you are aware of, BRICS. It's a group of countries that have come together because they have similar aligning interests. They're the major force that is against the US and NATO to some extent. And in the midst of all of these geopolitical tensions that we have experienced in the past 4 years, this group has grown in size. You have the likes of Egypt, you have the likes of Saudi Arabia, you have the likes of Iran, Ethiopia, the UAE, and some other 10 partnering countries who are not members but are partners, of which Nigeria is a part of. All of these guys are slowly swooping into that analogy or into that coalition to try and, do something that benefits them, that helps them in their quest to become dominant forces and key players, even outside of the G7. Now, these guys control about 40% of the global GDP. So there are people that we need to pay very close attention to, and the people that would cause very great harm, not physically, but in terms of strategy and how the global space is going to be shaped in the next 10, 20 years. Now, these guys also have enormous oil reserves. So there's a coalition that is being built outside of the US, which involves Russia, China, and all of these other key guys, that is going to make them a very dominant force, not only in the critical minerals space, but also when it comes to the energy space. China, in the midst of all of this, has also styled itself in a very nice way as a very good friend and a good partner for Africa. Because when US was going about throwing around tariffs all around, China, on the other hand, was reducing tariffs for most African countries. Even some African countries do not have to go through any tariff implication or any tariff slapping. in terms of things going from Africa to China. Now, another person that has benefited so much from this tensions or these tensions is Iran. Iran, out of this, has shown the world that they can be able to go toe to toe with the US. And by that, it has distinguished itself as a formidable force in the Middle East because the US at the start of the war said that, hey, we are going to end this war or we are going to end this disturbance in Iran in about a week. A week passed, wasn't solved. A month passed, wasn't solved. And Iran, like most of you know, has developed key technology in drones that has been able to help them in breaking down all of the forces and all of the attacks that the US has meted out against them in the past couple of months. Now, these things are not things of the past, but the war is not over. There are things that are still occurring, and there's a very high probability that escalations could take place. And one of the key things that makes me believe that is the fact that NATO is looking so much to get involved. And last 2 weeks, NATO says that some Russian missiles hit Poland during the Ukraine attack. And they are going to do their investigations. And if something of this sort continues, they are going to retaliate. Now, the US, in the midst of all of that, has been poking Iran, throwing in missiles, making comments, trying to just get Iran to do something that would warrant them or give them the platform to attack them. Now, the US has also said several times that, hey, we are giving Iran, we are giving you a very last chance. If you don't sit up, we are going to do XYZ to you. Iran, on the other side, what they have done is that when the US tries to make a play in the Persian Gulf, what they have done is that they have spread out or meted out that anger over a lot of the other countries within that sub-region. And in the very past few days, what Iran has done is that they've hit some LNG processing complexes in Qatar. And what that has done is that it has wiped out about 17% of Qatar's export capacity when it comes to LNG or liquefied natural gas. And what analysts are saying is that these attacks on Qatar, on Saudi Arabia, and especially the one that happened recently on Qatar, analysts are saying that it will take about 3 to 5 years for those repairs to be done. And this becomes a very huge worry for the petroleum space, especially for Ghana. And it's something that we really need to take a look at. Now, I've said a lot about what has happened. How does the global vessel map look like? Now, in the past 90 days, through the global map vessels portal or plugin in Bloomberg, this is how global vessel flow is supposed to look like. Very organized, very structured, and very efficient. Now, let me zoom in into what we have seen in the past few months. Now, there's a lot of conversation about this section of the world, which is what they call the Straits of Hormuz. Now, this particular section is very important because the composition of oil deposits within this region, because you have the likes of Kuwait, you have the likes of Iran, you have the likes of Saudi Arabia and UAE, all of them producing about 1/5 of the world's entire crude oil population, even LNG supplies. All of that travels through the straits. Now, Iran, in a very shady way, and this just brings into mind something that I was reading about. In the past, people used to make jokes of the fact that this is a very critical section of the world where a lot of crude and a lot of liquefied natural gas is being produced. What if one day Iran decides to block the streets? And there was a conversation that was being had in the Gulf and other parts of the world by commodity analysts for some time. Now, this brought into question the fact that if this happens, what should we do within the Gulf states? What are the things that we can do? It's a very, very narrow path, and that is essentially where crude and liquefied natural petroleum gas is supposed to pass. Now, what the Gulf states did is that they devised a plan. In the early 1980s, I'm going to zoom out a bit. In the early 1980s, Saudi Arabia, which is this, Saudi Arabia did something very important. They realized that, and at the time, Iraq and Iran were at war, and Saudi Arabia took the chance. They realized that this strait is a very critical part of the global space in terms of oil. Now, if we are caught up in this mess, or we are caught up in the fact that we cannot move our oil reserves through the straits, what then are we supposed to do? So the Saudi Arabia, by virtue of taking precaution, they built a pipeline from the west side of their country all the way to the east. And what they call this is the East-West pipeline. And it went across Saudi Arabia's territory. What this pipeline has done for Saudi Arabia is very essential for us to understand. What it has done is that it has helped them to divert about 7 million barrels of oil per day through the Red Sea. Now, this is the Persian Gulf, and this is the Red Sea. What he has done is that if this part of the strait is blocked, what is the next necessary route that we can use? And what they did is very simple. They just built another pipeline that moves crude oil reserves or crude oil production and LNG from the Persian Gulf westward towards the Red Sea. And that has played a very key role in the kind of production and in the kind of vessel movements that we have seen in the past 90 days. Because if Saudi Arabia was unable to move all of its crude production through the Strait of Hormuz, and it didn't, then it means that the rest of the global economy just has to wait. And that puts a very huge strain on global Brent crude oil prices. Now, the reason why it's very important is that this 7 million barrels that Saudi Arabia has been able to channel from the Persian Gulf all the way into the Red Sea is because this is essentially 100%, close to about 100% of what it would have moved through the Strait of Hormuz. Now, other countries do not have that luxury in doing what Saudi Arabia has done because of mainly where they find themselves geographically. Now, Iraq cannot do same because right behind them is another country. They would have to have an agreement with that country to be able to build that pipeline. What the UAE also tried to do is that they also built a pipeline from their section of the Gulf states, also trying to evade that Strait of Hormuz. But it hasn't been as effective as what Saudi Arabia has done. So Saudi Arabia is benefiting from building strategically a pipeline that helps it maintain dominance, helps it maintain revenue generation, and puts it in a very important place in the world. Now, all of these tensions within this region have affected so much the Asian countries in India, in China, in Japan, Indonesia, and all of those Asian countries, because it's relatively the much easier and faster routes for them to be able to access or access crude. Now, there's something that's emanating, and it's an evolution of the war. What Iran is trying to do in the midst of all of this, and sorry to bore you with a lot of geopolitical tensions within the region, but it's just to give you color. What Iran is trying to do is Iran has a militia group, which is the Houthis and Hezbollah. What Iran is trying to do is it is trying to incite the Houthis and Hezbollah to hit vessels that are moving in the Red Sea as well. What that means is that all of these 7 million barrels that I've spoken about, that Saudi Arabia is able to move all the way from the Persian Gulf into the Red Sea, all of that will be lost. That would mean that Saudi Arabia will now have to move all of that crude oil exports upward, up north in this direction. And that would be through the Suez Canal. What that means is that it takes it about 4 more weeks to get to Asia. And this would have very significant impacts on how Asia's growth trajectory is going to be, what the crisis in that region is going to be, and things of that sort. Now, geopolitical tensions is a very maddening thing to think about, especially if you're a global leader, and especially if you are trying to get votes or you are trying to keep your country's financials very stable. So a very important group, which is the Global Risks Perception Group, they try to run a survey. And it's very important to know what the survey entails. Now, they run a survey between August and September 2025. And what they tried to do was that they put together about 1,000 plus experts. And these experts are in academia, these experts are in government, they're in business, they're in international operations, international organizations, they are in civil societies, etc. And the aim was simple, to ask them simple questions. And one of those simple questions is, which global risk is your biggest worry over the next 10 years? So ask them a question between now and the next 10 years, which is about 2036. What are the things that scare you a lot? And in those top 10 questions that were asked, geopolitical tensions were not a major part of that. And that was very interesting to note. What is the scariest thing for most of these experts and leaders in countries is extreme weather events, biodiversity, critical change in the earth systems, misinformation and disinformation, adverse outcomes of the AI technology, natural resource shortage, societal polarization, etc. Now, that's in 10 years. When they asked them that same question, but with a much shorter horizon, what they said was that the major thing that is going to drive 2026 is geo-economic confrontation. Now, the question you might ask is, what really is geo-economic confrontations? It's just the other side of the coin of geopolitical tensions. And in this terrain, when it comes to geoeconomics, what countries do is that they use trade policy, they use investment controls, they use sanctions to try and advance their geopolitical goals and project power without really relying on military. So it's not a military force. We are not shooting guns. We are not doing any other thing, but we are using policies. And Ghana has been a recipient of some of that, especially if you look critically at the relations between Ghana and South Africa, with South Africa asking Ghanaian citizens to evacuate, to come back to their country. That's a geo-economic issue. Now, about 18% of the people said that, hey, we think that in 2026 is going to be much more shaped by geo-economic confrontations. The next thing that people said was going to be much more prevalent is state-backed armed conflicts. We've seen that with Ukraine, with Iran, with Hezbollah, and the Houthis, all against Iran and other Gulf states. And then there's extreme weather events, etc. What I want us to focus on is geo-economic confrontations. Now, we tend to look so much at geopolitical tensions, but there's a growing phase, or there's an evolving war from geopolitics into geoeconomics, where there's no militia involvement, but it's just policy, it's just investment controls, it's just financial sanctions just to get you to toe in line. Now they ask the same people about the future, and about 82% of them believe that the next phase of the world, if you look at the output or you look at the outlook in through the geopolitical sense, about 68% say that the future is going to be so much shaped by power contests. There's going to be a lot of power contests in the geopolitical space or in the global economy. Now, about 14%, which is the largest after the 68%, are saying that there's going to be very huge competition between two superpowers. And in my mind, those two superpowers are going to be the US, obviously, and then China. I've spoken a lot about geopolitical tensions. What has all of these events really meant for Africa? And that's the question that is on most people's minds. Now, within all of those periods of geopolitical tensions, there's been a lot of disturbances, especially with the fact that oil prices have skyrocketed on the African continent. In Kenya, for instance, the government is in constant tussles with oil companies on subsidies. There's been a series of disputes in Ethiopia. The story is saying diesel prices have skyrocketed. Ghana, we know what our story is. These geopolitical tensions took us to the IMF for the 17th time. We saw very high hyperinflation. There was very huge currency volatility. We had debt distress. We had to even restructure our debts. In Nigeria, the story is saying they had very huge depreciation in the naira, lost about 69% of its value. But then again, Nigeria is an oil-producing country, so they had a very huge windfall of about 1.7 billion in oil revenue. Now, the other parts are gory. In Sierra Leone, for instance, 27 people lost their lives, right? Because the people were agitated, the people were in so much hardships, they took to the streets, they tried to protest to get the government to listen. And you know how protests work. When it's not so peaceful, then it goes the other way. So about 27 people lost their life in August 2022 when they organized a protest. Now, all of these things that I've spoken about in the very past few slides are facts. Some of them are bridled with a bit of sentiment, but there are a few gemstones, or there are a few gems that we can uncover, or there are a few more gems that we can pick out of this chaos. One of them is very important. One of them is the fact that the US is losing its foothold. Now, one measure of confidence in a currency as a store of value is its usage in official foreign exchange reserves. Now, the Federal Reserve, or the US Federal Reserve, puts this document together. I'm still not so convinced about this because the US Federal Reserve, in my opinion, found it very convenient to leave out the numbers for 2025. But that is fair. We can work with what we have. What the US Federal Reserve themselves said in this document or in this report is the fact that the US dollar composed just about 58% of disclosed global official currency reserves in 2024. Now, what that means is you see this decline all the way from 72% somewhere around 19 or 2001, thereabouts. You see that steady decline in the confidence that the market has, or the confidence that central bank has in the US dollar. And main reason why the component or the fraction of global currency in official foreign currency reserves are declining. Now, this drop takes the US back close to about 30 years. It's the same level as it was in 1995, right? Now, the US argues that this is nothing new. And the fact that in 2022, Russia, China, etc., made a very huge shout about de-dollarization. But this decline matches so much with the same percentage that they saw in 2022. Now, read what they said. They said that the US dollar comprised about 58% of disclosed global official foreign reserves in 2024 and far surpassed all other currencies, including the euro, which is quite obvious, the Japanese yen, the British pound, and then the Chinese yuan, about 2%. The dollar share has declined from its peak of about 72% of reserves in 2001 as foreign reserve managers have added to their portfolios a wider range of smaller currencies. So most people are trying to diversify. Now it goes on to say that even with this decline, the dollar remains by far the dominant reserve currency and only returned to about the share it had in 1995. So there's been a shift. The US acknowledges it, but it still says that it's nothing new. It's similar to where we were in 1995. Now, this is a very key change that the market needs to take cognizance of. Now, the other thing that we uncovered by our research is with regards to gold reserves. Now, the share of official gold reserve assets has grown, right? But looking at it that way is on the surface alone is quite deceiving. A major part of this share growth that you see, and this blue line is really depicting the share of official reserve assets in the reserves of central banks. You see that very steep climb, and this is value. Now, what the US is saying is that you guys keep saying that people are moving away from the US dollar to gold. But what really is the fact, and which is true, is that the share of gold in official gold reserves has increased mainly because of value, right? And it says it here very clearly. It says that the share of gold in official reserve assets has more than doubled from below about 10% in 2015 to over about 23% within that period. But however, this increase mostly reflects the over 200% increase in gold prices. So sometimes we look at the data and we see that the share of gold reserves is growing across the world. But then again, we need to pay attention to the fact that a lot of this is value, and that value has so much been added on by the sheer growth of gold prices on the world market. So that's also something that we need to pay attention to. Now, to tie it all together, in all of these geopolitical tensions, what I see clearly is the fact that there is a play in the EV space or in mobility. And I say that because China manages about 70% of rare earth mining production in the world. China also controls about 90% of processing. So China dominates effectively a major chunk of EV components production in the world, and it has enormous influence on the rare earth space. Reason why the US sided with Ukraine and tried to secure critical minerals in Ukraine. Now, the US in the past has placed a series of restrictions on Chinese technology just to make sure that it keeps it in check. And the rhetoric is always the fact that Chinese technology is a huge risk to the US's security apparatus. Now, the US, in the midst of all of that, what they have also done is, while they are sanctioning China, they are also trying to secure critical minerals in other spaces. Now, pay attention. They're trying to secure critical minerals in Madagascar. They're trying to sign an arrangement with DR Congo. What they have done also on the side is they are trying to sign critical mineral agreements, or have signed critical mineral agreements with Ukraine. So in the midst of all of these geopolitical tensions, there's an EV conversation, or there's a mobility conversation that really needs to be had. Now, I'll run through what we think, how it affects markets, and what our view is concerning all of these tensions and some of the effects that it has on markets. Now, for oil, we know the story very clearly. In 2022, when Russia attacked Ukraine, oil prices went up. Whilst the war went on, it scaled down a bit, and crude oil prices dropped amid easing political disputes in Libya at the time. Also had demand concerns. There were recession conversations within that time. But all of these have resurfaced. Now, what our view is concerning oil is the fact that the tensions in the Middle East are expected to continue, and we hope that it ends, but it doesn't look very likely. If there's a 90-day pause, we are very much open to it, because it gives the whole of the global space a breathing space. Now, the US, in the midst of all of this, has also made comments about the fact that they want to capture Card Island, which is very critical. It's an oil reserve island, or it's an oil producing island of Iran. What this will do is that it will give US boots on ground, and that changes the dynamics of the war. I've already spoken about the fact that Iran wants, through its sponsored militia, which is the Houthi group, they also want to attack vessels that are moving across the Red Sea. What that does is that it gives an upside push to oil prices. So our view is very simple. The war between Russia and Ukraine, the war between Iran and the US is not likely to end in a very short possible time. And despite all of the things that we've spoken about, there's very much likelihood of the fact that negotiations could possibly go wrong, and we have seen it. What has also helped this war is the fact that the International Energy Agency has so much pumped up a lot of oil onto the global space, about 400 million barrels. And you see the likes of the US, the likes of Japan, the likes of Korea, also pulling up stockpiles and trying to sort of cushion the kind of pressure that we were supposed to see in the political space. Now, the war must end soon, because the stockpiles are dwindling at a very sharp rate. And analysts are saying that this means that if the war elongates for a very long time, then there could be a problem. Just yesterday, the US did something very important, which also ties into the geoeconomic space. Now, Trump is saying that it's going to reduce the US-South Korea drills, because it is not getting support from South Korea and its allies when it comes to the US-Israeli war against Iran. So it is going to pull back. Now, that ties into the things that we've spoken about what the US wants, what the very big or very huge superpowers in the global space are looking at. Now, that is on one side. The geoeconomic part of this is that the US has signed agreements with South Korea, and South Korea has pledged to invest about $35 billion into the US economy. And if you have Trump saying that is going to step away, is going to reduce the number of drills and the number of trainings that it is having with South Korea and all of those other countries that it supports in Asia, What that does is that it creates or it brings up another problem of North Korea being handed a boost in that region. Now, I've spoken a lot about a lot of things. What does this mean for Ghana, and what does Ghana have to do? Now, the Ghanaian economy or Ghana has taken very critical steps through TOR and CENTO. Now, TOR has about 45,000 crude, barrels per day, barrels per stream day, crude capacity and crude distillation units that is able to refine crude. In the past, it wasn't functional. What government has done is that they have put that back live. And what that does is it also gives us a bit more room to be able to cater for some of the consumption demand that we have, and also mitigate some of these challenges or some of these headwinds that we have experienced in the past. Now, crude is a very important part of our economy, and it affects inflation and affects interest rates. The reason why we've been able to see a much more calmer transition between crude oil prices and now is because of some of the other features that government has introduced within that period of time. What government also wants to do is the fact that it wants to increase this capacity from about 45,000 all the way to about 100,000 barrels per day, so that government or refining in Ghana can be able to cater for the demand that we have for it. Now, TOR is not the only refinery that Ghana has. We have the Central Oil Refinery as well. Also, production capacity around the same 40, 45 barrels per day. Now, how much indeed does Ghana consume? From the work that the research team did, it has about 100,000, close to 130,000 consumption capacity within a month. If we have TOR producing about 100,000 and we have CENTO producing close to about 100,000, then that demand is sort of taken care of. And by the capacity of crude storage that they have, that is going to take us through about 43 days of crude supply in stock. And that helps us as a nation. What we did also was we tried to look at the correlation to see what has changed between 2022 and now. What has really changed? So we looked at crude oil prices and what the effects or the transitory effect has been on transport inflation in the past couple of years. What we realized was between 2018 and 2021, the correlation was not as strong. In 2022, when the Russia-Ukraine war started, we saw that very strong flow through between crude oil prices and transport inflation within that period. Correlation was as strong as about 0.74. Now, in percentage terms, that's about 74.8% strong correlation between crude oil prices and transport. What we have seen, or what we saw in 2023 all the way to about 2024, is that that strong correlation has reduced, and it plays into the fact that government has taken very critical measures through its Go for Oil program at the time that mitigated all of that effect. What this regime has done is taken it a notch further through the gold reserve accumulation. What it has done is that it has given us breathing room, and breathing room not so much because car drivers or people who have cars are still feeling it. But the truth is that the correlation or the kind of impacts that we've seen in the past, all the way to about 70%, has reduced all the way to around 20.3%. Now, what we want to propose or what we want to add in the sense of economic stability going forward is the fact that every single year we have close to about 100,000 cars being registered in this country, and that puts a lot of pressure on crude. It puts a lot of pressure at the pump, and that also has an effect on the kind of transport prices that we see, etc. What if we can move all of this demand away from fuel? Why not bring in more EV cars? Why not push a more EV agenda, just like we are seeing on the global space? Now, China is not so much affected by all of these oil price spikes because in the past few years, the adoption of EVs in China has grown so much. So in the midst of all of this work, China has even dropped its demand for oil. I mean, China on the other side is not producing as much as it used to, but this EV adoption agenda by China has so much helped them, and it can so much help us on this part of the world. You look at Ghana's electricity consumption, and a major part of it goes into residential, and it has seen about an 88% growth within that time. Now, the good part that we also see is the fact that industry is also growing in that electricity consumption. What we can do, aside putting so much pressure on crude and oil or gasoline at the pump, is we can also diversify our residential consumption of electricity. Why not build more solar? Why not go more renewable? Why not add on to the very little things that are going to give Ghana as a country breathing room to be able to withstand all of these shocks and all of these tensions that have been stirred up in the upper parts of the globe, which significantly affects our country, inflation, currency, debt management, and all of those other things. So we need to do much more in the renewable space. We need to look more at EVs. We need to build that section. If you look at what transport consumption of electricity consumption is very negligible. So there's more room for us to improve, especially with the pressure that we see at the X pump. And this is one of the key things that the team wanted to show us. The reason why this is a lot more important is the fact that Africa plays a very important role in this EV space, in battery manufacturing, mainly because Africa has some of the largest share of global reserves in cobalt. It has about 48% in cobalt, about 47, close to 48% in manganese. It has about 21.6% in graphite, about 5.3%. It has all of these necessary resources that it needs to be able to transition from its super dependence on crude and oil, petrol, diesel, and move through the channels of a much sustainable way and a much renewable way. What you also see is, I spoke about it in the previous slide, it is very clear where the world is headed, where the US is headed, where China is headed. In just looking at the relationship that the US is trying to cultivate with DR Congo, you can see clearly what the US is trying to build. Now, DR Congo has part of the major share of reserves in cobalt, and the US sees that. But us on the African continent, we are not able to harness all of this information. We are not able to move faster. We would spend much more time in building refineries, and by the time we realize the world has so much transitioned away from ice or combustion engines all the way to renewables, and down will be cut whole in a falling knife. And what we'll realize is that we built with so much money, we built with so much resources, and we'll end up being behind again. And what we'll see is that the world has so much moved away from us. We spent so much money, and there's nothing that we can be able to gain from all of the work that we have done. Now, away from oil, the main story in oil is Ghana needs to find a way. Building refineries is good. What we have to do is we have to encourage more EV adoption so that the effects on our economy is not so dire. The effects on currency is not so dire. The pass-through effects on interest rates is not so dire, and we can be able to withstand the shocks that we see. Now, another very key commodities, and I'm getting to the very latter part of my presentation, is gold. In the past few years, what we have seen clearly is the fact that there are lots of countries that are slowly gravitating towards gold. And some of these things have been mainly sped up by the fact that there was There was fear of a US shutdown. What we also see is China is so much trying to diversify away from the US. So that has led to all of this rally that you have seen move all the way from the 2000s region all the way to 5,000. And I remember very clearly last 3 years, remember Mr. Pierre was having a conversation with the team and he said it very clearly that gold was going to go above 4,000. And that is what we are seeing. Now, our view is very simple when it comes to gold. The geopolitical tensions are going to remain. What is going to be a problem is the fact that when the tension so much escalates and you see the flow through clearly through inflation, what happens is that Federal Reserves or central banks are going to hike rates. When rates are high, people are going to try and recycle all of this rally in gold back into US treasuries. And then it plays back into the hands of the US. Because what it does is that then it goes on to strengthen the US's position and the US's financial position in terms of the kind of money that moves into the US economy. It can do more, it can expand its dominance, it can expand its global appeal, it can expand its leverage on the global space. Now, it's two-sided. The flip side is that there's a renewed gold rush, and you cannot overlook that. Private firms, people that are building ETFs across the world are all adding to all of this. And the view is that this is going to continue. You've seen it very clearly in previous slides when I spoke about the fact that the US's currency in global foreign exchange reserves is declining. We've also seen it clearly that a lot of countries are moving slowly towards gold. China in July of 2026, for the very ninth time, increased its gold reserves. Now I'll show you a chart. Poland, Czech Republic, Hungary, Serbia, Georgia, Turkey, India, China, Uzbekistan, Ghana, Iraq, even Zimbabwe, all of them increase their gold reserve net. Transactions that we've seen in 2024, we're waiting for the numbers that will come out in 2025. What these countries are doing is very clear. Everyone wants to be insulated. The Russia-Ukraine war started in 2022. You'll be shocked to note that it has taken us close to about 5 years. And it's not over. The more we spend time trying to do other things that will not benefit us, the more we tend to lag behind. And it's very good that the government through the gold board is trying to build reserves to be able to surmount some of these shocks that we are seeing. Now, the other countries period have reduced their net gold positions. One of them is the Philippines, Kazakhstan, and a few other countries. Now, for Kazakhstan, for instance, it reduced its gold reserve by about 10 tons, mainly because they wanted to deploy some of that towards its open market operations aimed at curbing inflation expectations in Kazakhstan. Now, the Philippines, for instance, they took advantage. They sold gold because they wanted to make profits, right? They took the opportunity when gold prices went up. Now, Thailand, also not on the sheets, what they did was that they dropped their holdings because they wanted to just comply with the IMF's standard concerning the classification in their classification and monetary strategy. Now, these countries are doing something that is making sense, because if you're on the African continent and your country, your currency tends to depreciate at a very fast rate whenever there's geopolitical tensions, you need to find a solution around this. We've tried to curb that in the past, but what I see we have done, and what I appreciate, is the fact that we have found a much more sustainable way, in quotes, to, in the medium term, to curb some of these global shocks. Now, government has tightened its, or has strengthened its position in that region of accumulating more gold. In the past few months, the gold composition of the holdings or the reserves has dropped all the way to around 24.4 tons. But I get that if you look at it on just the number of tons, you might miss it. The truth is that when you look at the summary of economic data, the holdings have dropped, but then again, the value of those holdings are much higher than they used to be because of the rallies that we have experienced in gold. And it just ties into what other countries like Kazakhstan and the Philippines have done. I spoke about that in the previous slide. So government is doing the right thing. The World Gold Council has suggested that central banks are looking to step up their buying of gold next year. So that is going to add to the gold rush. Central banks are spearheading a renewed gold rush. That's something that we need to critically look at. And just last week, while we're putting this presentation together, we realized that the government were going to, suggest that looking at the policy that government threw out some earlier parts through the Ghana Accelerated National Reserve Accumulation Policy, somewhere around June thereabouts. Now, what government has done is that it has agreed in a memorandum of understanding with the large-scale mining firms that you are going to sell 30% of all the gold that you produce to us. And it makes a lot of sense to me because there's been a lot of backlash, and rightly so, around the fact that a lot of the accumulation that has come through the gold board has mainly been through the small scale channel, and that is sort of a catalyst or something that encourages illegal mining, etc. So that is a very good point. So what government I see is doing is trying to find another channel that is viable, that is sustainable, that can help them in a very longer space of time. Now, this MOU or this memorandum of understanding is supposed to help governments build about 15 months of import cover, right? And that's very important because you need to build strong reserves. You need to build a strong base to be able to weather the storms that some of these bigger countries are throwing at the rest of the world. Forget about what other countries are doing, but look clearly at them. Pick a cue, and then where it benefits you, you can implement them. And I think the Ministry of Finance and the Bank of Ghana have done a very great job at monitoring some of these things. Now, what do these mean in numbers? But before that, we can clearly see that the gold accumulation has so much helped us in currency stability. It has been very clear. It has helped us so much in taming inflation. It has been very clear. I showed a previous slide of the fact that we don't see so much of that strong correlation between the evolution of crude oil prices and transport inflation within that period. So it's very clear what the policy is doing and how it's affecting us, but we still believe there's more room for improvement. Now, government is targeting increasing its gold accumulation with this MOU. What I think government should also do, and what I think Ghana should also do, and as part of the reasons for this presentation, is that we need to safeguard a lot of our essential minerals. It's something that we need to pay critical attention to, because you look at the place and the strategies that these G7 countries and these dominant countries are undertaking, it's very clear what they want to do. What we also have to do is pick a cue from it, safeguard essential minerals, build reserves in them so that when the need comes and when the time comes, Ghana can be able to benefit from it. And it helps us all, it helps the nation, keeps us economically stable, helps interest rates, keeps the market growing, and everybody is happy. Now, what do these numbers mean? They said 30%. What does that really translate into? Now, you look at the large-scale mining production in Ghana between 2022 and 2023, and this is one of the last two slides. Then I'll draw my curtains because I've spoken too much. Large-scale producers in Ghana for 2023 did about 1.2 million ounces in gold production. Now that dropped marginally in 2024, and what they cite is production inefficiencies, etc. Let's say that is true. Now it dropped by about 0.15%. And what does that mean in tons? Because when the summary of economic data comes out, what they do is that they give us what that means in tons. So I try to extrapolate what that means in tons. In 2023, what that means is that we did about 83 tons of gold production by large-scale firms, and that drops to about 82 tons in gold production. You look at small-scale mining, and reason why most people have a point when they say that we have to be careful how we monetize the small-scale section to build the economy, because you don't want to incentivize ill character or illegal small-scale mining. And the numbers are very clear. Between 2023 and 2024, small-scale mining jumped by about 70%, from about 1.1 million ounces from small-scale producers all the way to about 1.8 million ounces from small-scale producers. That's about 32 tons all the way up to about 54 tons. Now, what does this mean? Why wouldn't government look at increasing its grip hold on the small-scale space? I believe what government wants to do is that it wants to intensify the fight against galamsey or illegal mining, but then again also it wants to find another viable route where it can be able to get the same or similar benefits as it has in the past few years or in the past 2 years from the small-scale space and through the gold board. This 82 tons, if you do the calculation on the 30% that government wants to receive, it comes to about 24.6 tons thereabout to government. If you add that 24.6 tons to what government already has, that gives government close to about 40 tons of gold holdings. And that gives us about 8 months of import cover just in a year if we are able to do that. So it's a viable area that government is looking at, and hopefully that can give us a much more firmer grip and a way to be able to withstand all of the shocks that we have seen in the global space. I've spoken a lot about gold. I'll speak about cocoa, and then I'll bring the curtains to a close. Now, cocoa has been a pivotal topic in Ghana's space, and not just Ghana, but Ivory Coast and some other countries. It's very important for economic stability. We've seen that, and the effects or the main problems in the cocoa space have to be taken care of. Now, within the period of 2019 and 2026, we've seen cocoa prices being volatile on the global space. Now, in 2023, we saw the surge when rising freight costs added on to that rally. In around December, thereabouts, Ghana and Ivory Coast, they reported higher dry temperatures within that region, so it added on to the price volatility. Rising margins also had an effect. Now, Ivory Coast grinding power dropped to about 31% year on year, and was mainly as a result of the quality of the beans, etc. So cocoa has been through such a turbulent time. Now, the good part is that, and the cue to pick here is, government has signed a memorandum of understanding with Ivory Coast, and that helps us because it gives both of the two countries a much more firmer grip on prices at the farm gate. So smuggling kept, and then we can be able to have a much more stronger bargaining power against with the other economies or importers. Right now, Cocoa Board has said something that is very striking, and that has affected what we see here. Now, in the past few months, what Cocoa Board has said is that it's projecting that cocoa production is going to drop about 16% within the 2026-2027 season because of pod disease, aging cocoa farms, and then also illegal mining activities, because people are turning their cocoa farms into other things, right? So it's a big worry for the global space and global investors. Reason why you can see the strong demand and the great appreciation in cocoa prices as we have seen. Now, so our view is very simple. Freight costs presents an added layer of upside risk in the Iran-backed Houthi group, if the Iran-backed Houthi group attacks vessels in the Red Sea. And then also the recent agreements between Ghana and Ivory Coast will provide value for farmers, deepening scientific collaboration to fight cocoa swollen shoots and virus. And then also the expansion of the local processing as part of that agreement is going to add a lot more value to cocoa. Now, the possible yield decline within this period is going to fuel price appreciation in cocoa. So Ghana is going to benefit a lot more from that. What we have to do and what I see government doing, and the idea has been floated, is that bonds are going to be raised to help cocoa board and pay upfront and make farmers happy, invest in fertilizer, invest in protective chemicals, etc., that are going to prevent all of the diseases that we see. The last final bit that I'm going to add is that to be economically stable and sound, our state enterprises must work. And I add this because it's very important. We need to, as a country, find a way where state institutions or state-backed institutions are not draining from government. Now, this is a report by the State Interest in Governance Authority, SIGA, and they puts together the bottom line of about 10 SEUs by total assets within the period 2024. And you see the Ghana Ports and Harbors Authority, about 2.4 billion. You see the Breed Power, you see GNPC, GNCC, which is gas, you see Consolidated Bank, etc. But then you look at some of these other countries, some of these other institutions, Cocoa Board, ECG, etc. What we have to do in the question of economic stability, even as we tackle or build our gold reserves, even as we try and move towards more electronic vehicles to reduce the pressure on fuel prices, etc. What we have to do also is we have to make sure that all of our state institutions work so that it's less pressure to government and government is able to take care of other things. What that does for the investor, and that's the main point of this presentation, is the fact that it keeps things in check. It makes sure that inflation is curtailed, currency volatility is kept at its minimum, people are able to borrow at much more cheaper rates because rates will drop. Then the equity markets can expand. People can do more trades. People can come onto the market, raise more money, make the GSE happy, make the market happy, grow the market cap of the industry so that all of us can benefit out of this. So there are key areas that you can look out for. And this is the very last slide before the presentation ends. What you can do as an investor is you can see all of this chaos, but there's something to be gained out of it. Make sure you have exposure to refinery. Make sure you have exposure to the storage space because of the booming AI and the fact that people need much more storage. These companies are expanding. They want to build data centers, invest in the storage space, have exposure to gold, and then also try and spread your wings in other African markets, in other spaces. Buy some EEBF, buy some Palantir, buy some NVIDIA, invest in CCMF, do other things that are going to grow your portfolio and other things that are going to give you an added edge in the midst of all of these chaos. So these are the things that I wanted to share when you look at geopolitics, what is happening, what Ghana is doing, what Ghana has to do, how we can be able to remain economically stable, and what the investor has to look out for. One last thing before I leave. There's going to be an IPO with Dangote. Blackstar can help you with that. And this is also in the refinery space. So let's look at some of these things and let's chat more. Thank you very much for sticking with me. It's been a very long presentation, but this is what we like to share. And we hope you enjoyed it. Thank you.
Yeah, Danny, thank you so much for this elaborate and insightful presentation. At the start of the call, I mentioned that you've been sitting on a lot, and we are glad to have you back. You felt like you wanted to explode, and it's good to hear from you today. On the topic geopolitics and commodities, I think often we just look at it on the surface, but we thank you for going deeper and then bringing more information that we need to gather to inform us on some of the investment decisions that we make. I think at this point, we'll just open the floor to take some questions from the audience in the next few minutes. You can just raise your hand or drop your questions in the chat box, and then I'll relay it to Daniel to answer some of these questions. Because we are behind time, Daniel, I think I have one question for you as well. So if we continue to see these geopolitical tensions happening around us, and our finance minister is saying that we are not going back to the IMF, and we know that when these tensions continue, it's going to put pressure on our economy. Do you see us going back to the IMF if these things continue over a long period?
That's a very good question, and it's something I'm glad to answer. I think Ghana doesn't go to the IMF if we stick to the path that we are on. What we have to do is we have to learn along the way, and I hope I can be heard. We have to learn along the way, and we have to not be afraid to improvise across or within that particular strategy. If we continue within that same tangent, we make sure that we curtail series of borrowing from the global space. Like the minister has said in other budgets that he's read, the government is going to focus so much on domestic debt raises. What we are going to do is we're going to insulate ourselves, because when geopolitical tensions happening and most part of your debt is in CD, then you are insulated. So we need to build more on that. We need to make sure that we generate much more revenue from all of our revenue lines. Government has a lot of businesses in rubber, in power generation, in chocolate processing. Cocoa Board has to, or CPC has to find another way aside pebbles, aside the golden tree. You can go into wafer. There are lots of things that most of these SEOs can do. And if we do all of those things, like I've said in the previous presentation, then there will be no pressure. And you wouldn't have to go back to the IMF because a lot of things have been sorted out. So that's my answer. I don't think Ghana goes to the IMF. If it does, then it will be a very big shame.
Thank you, Daniel. I think we have one question in the chat box for you from Eric Afun. He says, can Ghana fully benefit from a geopolitical driven gold price boom if a significant portion of the global gold investment is taking place through ETFs rather than through physical gold market?
Yeah, I think the question is layered in one, and I think the question sort of answers itself. You can't build a gold ETF without having some gold accumulation somewhere. So if there continues to be acceleration or a rally in gold prices, and for that matter, you see a lot of funds coming up, springing up in the ETF space. I looked at the chart right before the presentation from the Ghana Chamber of Mines, and a lot of the ETFs that are springing up are mainly going to be situated in the Americas, right, or in America, and that also tilts the geopolitical scale a bit, because if all of the gold that is being accumulated in ETFs is going into the US or North America, then the US also would have a foothold. But that's just away from the question. The question is very simple. Would Ghana benefit? I think Ghana benefits. Ghana benefits even if it's through ETFs, because then again, the underlying is gold, and the assets is just reflecting the value of another underlying assets. And that would benefit Ghana if Ghana continues to build its gold reserves, continues to ensure that small-scale mining is kept in all other areas. So yeah, Ghana benefits in the long term. That's my short answer to the question.
Thank you so much, Daniel. Eric, I hope your question was answered. Okay. Any other questions? Maybe you can just raise up your hand. We'll allow you to to speak or enable your microphone, maybe you can also leave your question in the chat box. Just relay that to Daniel. Any other questions from the participants on the call? If you have some views you want to share on the presentation as well. Okay, I think I've not seen any other questions in the chat box. Okay, I don't see any other questions in the chat box. Daniel, we thank you for that good one. Maybe before we go, I know we have institutional clients on the call, fund managers, pension trustees. From all that you've discussed, how should we see gold investment? How should we see fixed income investment going into, let's say, the next 12 months, going into next year?
I'm not a portfolio manager, but I'll try and answer this question. If you want to have exposure to gold, and for instance, you are looking at an ETF in Ghana, let's say, for instance, to the new gold ETF. We're not seeing so much trading on that ticker, mainly because of some issues, FX, etc. If you compare to what the price actually is supposed to be, price is much higher than it's supposed to be, especially on the Ghana Stock Exchange. So I wouldn't say don't I wouldn't say don't take positions in GLD yet, but all I'll say is keep an eye out for it. But if you are a portfolio manager and you're looking at having exposure to it, but you want to do it outside of Ghana, through maybe a Vanet ETF or any other ETF, a Vanguard ETF, etc., I think you can do that. Also, what we can do is, as market makers, as market participants, to grow the markets, we can also try and do much more trading, make trading much more reflective of what pricing actually should be, especially when we look at the trend on the global space. So portfolio managers, you can do more of that through ETFs outside of country if you want to. If you want to have exposure to the new gold ETF, that's also explorable. If you want to have exposure to other markets, that would help you enjoy some of the benefits that these companies like Palantir, etc., have benefited from all of these geopolitical tensions. And I think you can look at some of our funds in MiniBF and CCMF, and we can be able to help you do that. So, yeah.
Yeah, Danny, thank you for that one. For those watching on YouTube, there's one question for you from one David Goethe, who says, what happens to gold? What happens to Ghana's economy when gold prices plummet? Looking at how Ghana's export is concentrated in gold.
Yeah, that's a very good question, and it's a two-sided question. And reason why the gold strategy that government has taken, or what our neighbors on the Tumu Wall Streets have taken, is very important, is the fact that they're not just looking at accumulation. I mean, for the past 2 years, what they have done is they've looked at the trend whenever they anticipate, or by market sounding, or by speaking to partners across the world about peak. What they do, and like they've done in the latter parts of last year, is they've cut that holding, they've converted that into FX, used that in supporting the economy, keeping OMCs happy. And your question is very valid in the sense that it's something that we have to look at. And the reason why I say it's a very good question, it's we have to look at it in the sense that geopolitical tensions, in as much as we think it's going to continue, there's going to be a part where the market is going to be fatigued in terms of pricing, which brings your question into play. And when all of that drops, then Ghana holds reserves in gold, but it's not able to maximize on that. And I think that the guys at the Ministry of Finance have a much more good reading on that. I'm sure because they are managing the portfolio actively, they'll be able to see some of these things and be able to curb them. But it's a big risk, not as big as you might think it is, but the fact that they are managing the portfolio actively gives them an opportunity to take advantage of swings and be able to scale some of these plummets or clients in prices over time.
Daniel, so there is one question on YouTube again that says, I'm trying to just, we would appreciate Blackstar for making things much simpler for those of us in the diaspora. Any information on when Dangote's refinery IPO would come on the Blackstar?
Yeah, we'll be doing that. And you know what you can do to help us is you can just underneath your question, you can drop your email. We'll be blasting out a lot of information. What we're trying to do as a team is we're trying to give our clients, like you've already realized, exposure to other markets. Kenya, the Ghana Stock Exchange is doing such a very brilliant job with the African Exchanges Linkage Program, AELP. So we're going to double down on that and would give you much more information. What we have is it's been moved to October, I think, from the initial September. We're going to draft out, put together a communique for people that are looking to invest in that refinery and other very good opportunities that come up on the Ghana Stock Exchange in Nairobi, in Johannesburg, in Casablanca, etc. So we will do that work and we'll put it together. And when it's going to be available on the app, like we've done with all the other new products that we show on the app, we're going to do that. So thank you very much for your question. But please kindly drop your email in the chat so that we can follow up. And any other person who is interested, just drop your emails. When we see your emails on YouTube, we'll know what you want and we can be able to assist you. So thank you very much. We'll do that.
Yeah, thank you, Daniel, too. And that will bring us to the end of today's session. Thank you so much, Daniel, for walking us through what is shaping up to be a complex period for markets, geopolitics, on commodities, and how that affects widows in Ghana. But before we end the call, before we go away, we just want to tell you how Blackstar can support you beyond these sessions that we are having. So we are a full service investment banking and securities firm working with sovereign, institutional, and corporate clients across the region. On the advisory side as well, our team supports capital raising, project finance, and M&A business modeling and strategic board advisory. And when you look at our investment banking and capital market debt also, they help to execute debt, equity, and hybrid financing, including IPOs. And so if you are thinking about how you can access the capital market, that's a conversation you can have with us. If you look at our trading decks as well, we are active across fixed income, Euro bonds, government securities, and corporate bonds as well. And so anytime you feel like reaching out to us right after this call, just connect with us via our social media platforms. You can go on our website, get our contact, and just engage us. Our asset management team also provides tailored investment solutions across fixed income, money market, balanced, and global equity markets. And so you can also reach out to our asset management team as well. And everything that you have seen today comes out of our research and insight team, who track the macro and market teams that matter to your portfolio across various asset classes. And so you want to just connect with them via our socials as well. If anything in today's session raises a question about your own portfolio strategy and how you should look at your portfolio going forward, our team would be glad to continue the conversation with you. So you'll find our contact details on the website, as I mentioned. Connect with us via our social media platforms as well. I hope that is okay for everyone. So thank you all once again for joining us this morning. You at the next edition of our Market Scholar. Do have a great day and see you all.